All right, bet y'all. Time crunch. We got 15 minutes till market open. And I want to record a trade recap over the trade I took yesterday. I lost $419, I think. Somewhere in the 400, a little bit more than 400. So I want to record the trade recap, and then we'll do a trade recap over the trade I take today. Market volatility is very high. I'm gonna show y'all how ultimately my bias yesterday was correct, but I just entered mad early. I took it off of invalid liquidity sweep, pretty much, an invalid displacement. And so, but my bias was correct. Literally, I think 20-30 minutes after my trade played out, we dumped. So, there's that. But anyway, let's run through that trade, and then I'll show y'all how I messed up, where I messed up, what I learned from it, and how you can avoid messing up also. All right, bet. Quick little. I'm gonna try to do this in 5 minutes, y'all. I'm gonna try to do it in 5 minutes because I'm trying to be swift. We got market open. Also, I just bought another funded account, so that's pretty lit. Just for funsies, you heard me. I'm gonna trade that one real aggressively because this one's taking forever to get a payout, but I'm gonna trade the other one super aggressively. All right, let me show y'all this trade I took yesterday. Right here. Okay, so boom. Market open. So I was bearish this day, right? We had this 1 hour fair value gap over here. Let me show y'all this. We had this 1 hour fair value gap right here. One hour fair value gap. Boom, right there. Right, we had tapped it once. Right here. So what I wanted to see us come up for that sweep of that high inside the fair value gap, and then come down and take out either equilibrium, which, mind you, this candle wasn't fully formed yet. Either equilibrium or this fair value gap. I want to see if I take out equilibrium or just come in, touch this fair value gap again, right? So boom, going into market open, what do we see? Market open. Yep, that was market open. Market open, we come down, we displace inside this fair value gap on a lower time frame, right? We take out that liquidity inside that fair value gap from the hourly low. And we start coming up to that high inside the fair value gap. So boom, we're in this high, okay? Once we take that high in that fair value gap, this is where I messed up. I saw we had an SMT. Let me go to the SMT. I saw we had an SMT after taking that high from, I believe it was this high. Where was it, bro? I low-key don't remember. Oh, I know where it was. It was on the 1 minute. It was on the 1 minute, y'all. Pretty goofy for me. We had a 1 minute SMT that I can't find right now, pretty much. But this is where I messed up. Because it was a 1 hour liquidity sweep, right? We need a lower time frame displacement, right? So we swept liquidity, and we can't use the hourly displacement in the SMT as a valid reason to come down. We still have to do it on a lower time frame too. So with that, this is what I should have did, and I can't remember the exact trade I took. I should have recorded a video. That's on me. I'm gonna show y'all the trade we should have took yesterday, right? Instead. So boom, right? We've coming up so far. We've taken out that hourly high, right? We just took it out. That's that line right there. And this is what we were waiting for. We're waiting for lower time frame displacement, right? Back to the downside now, because we've taken out a liquidity. We've taken out a drawn liquidity inside of fair value gap, right? So this is what we should have waited for. Boom, we get that high. We get this high right here, right? That high. Come up, take the high. After we take the high, we can go into the 1 minute, take shorts. When we come up, test this fair value gap. Boom. That should have been our trade right there. And then targeting all the way down. We could have targeted just the top of this 1 hour fair value gap. So, and then as you can see, come up again, just a little bit higher. It don't get stopped out though. And let me speed this up. And you'll see us slowly coming all the way down to come out and retouch that fair value gap there. And then we come all the way back up. Then we go like all the way back up again. But anyway, that should have been the trade from yesterday. Does that make sense, y'all? That should have been the trade. 1 hour liquidity sweep, 5-minute displacement, fair value gap, down. You know what I'm saying? Like, it was pretty simple. Anyway, I need to go analyze charts for today, see how I'm feeling for today, and then I'll run y'all trade recap after today's trade. So, yeah.
A few moments later.
All right, bet. So, market just opened. I'm going to run y'all through what I want to see for the day. And, yeah. So, basically, on the 4 hour, we have an S&T from these highs, and there's a highs like way over there, right? ES has not swept that high, but NASDAQ has. So we have this big old S&T divergence. I want to see us come up and take out this lower resistance liquidity on the hourly time frame to get our displacement. And on the lower time frames, I want to see us, like, you know, begin to disrespect this fair value gap and begin to, you know, see some momentum. But I'm not taking a trade unless we come up first and take out some liquidity. So I don't know if we'll do that. I don't know if we'll reverse here. And I'm targeting for the day these 4 hour fair value gap and or equilibrium. So, yeah, man. And we not trading until 9 o'clock. I didn't even see that, bro. We are not trading until 9. Fed Chow, bruh. Fed Chair Powell testifies. Oh, heck no. I ain't never seen that before. We're cooked. Price action is boons today, man. It's absolutely boons today, man. But, if we take this high out, I might look to take a short down into this fair value gap, low-key. I'll probably, if we do take this high and we see the rejection, I'm definitely not taking it all the way to equilibrium right here. That's because we do not have enough momentum for that, but I will take it to this fair value gap.
A few moments later.
All right, bet. I lost today. And I lost in a way that is very deserved because I did not trade correctly today. For real, I didn't really trade correctly today. I said I wasn't going to take a trade unless we took out an hourly draw. Then I took a trade even though we didn't take out an hourly draw. So that's some discipline stuff on my part. But I'm gonna run y'all through this trade so y'all can see how not to trade. All right, bet. So going to the day, right, we had news at 9 o'clock, so I wasn't trading until 9 o'clock. But what I wanted to see was us take out this hourly draw up here, right? These two hourly draws, one of the two. We were in equilibrium. I wanted to see us take out this hourly draw and then come down, essentially. But in market open, here's where I messed up. We had this fair value gap right here, right? On the 15-minute, we had this fair value gap. And we had tapped this fair value gap at 8:45, right? So I was like, oh, shoot. Maybe we come up, retest this high, right? And then we fall, right? So I was waiting for us to take that high, and I had set my mind on, okay, if we take out that 15-minute fair value gap, take out that high in the fair value gap, I'm going to take this trade. Poor decision-making. As you see, we took out that high, right? We took out that high at 9:40, put in an S&T. We disrespected a fair value gap on the 1 minute here, and I entered, targeting this fair value gap all the way down here. It's a 4 hour fair value gap. The problem was, first of all, I said I wasn't going to take a trade unless we took out hourly liquidity. And then I took the trade anyway, even though we did not take out no hourly liquidity, right? And so my takeaway from today is this. I'm not taking trades unless we have an hourly confluence, okay? Equilibrium doesn't count as an hourly confluence. That's just a means for market to move in my direction that I see fit, right? Like, if I believe market is going to go down and we're in premium, then great. You know, that's even more confluence. So we're probably going to go down, but that doesn't mean we're going to take a trade just because we're in premium. You know what I'm saying? If I think we're going to go up and we're in discount, that doesn't mean I'm going to take a trade just because we're in discount. You feel me? So either liquidity sweep, fair value gap, breaker block, or order block. Those are my four. And today I just didn't do that. As you can see, we wanted to come up and take out that high. And that's exactly what we did. We came out and we took out the hourly high. I was impatient. I saw something in the market that wasn't there, especially today. We were consolidating in a mug today. Today's price action low-key was not good. But yeah, that's my takeaway. I'm going to start risking less. I was risking more. That's why my losses are so big, because I started risking more. But I'm going to stop. I'm going to risk. I have another funded account. I have two. I have one that's passed, and I have an eval. So on my eval, I'm going to keep risking the mess out that account. I'm going to just grind the mess out that account. But my actual past account, this account, I'm going to start taking, I'm going to go back to my regular risk to rewards, because that account is in the danger zone right now. It's in the danger zone. So, but yeah, y'all, that was today's trade. I hope y'all learned some. Don't be stupid. I traded emotionally today and irrational. I just wanted to see us come down. I didn't want to miss it well, I can't even say it was emotional. I just had L logic on some stuff. I low-key just had some L logic. Like, I just had some trash logic. I guess it was emotional. I said I wasn't going to take it if it didn't sweep the hourly. We didn't sweep the hourly, but I still took a trade. So, hey, call it what you will. I'm going to call it being irrational and being hasty. But all in all, that was trades today, y'all. Stay prayed up. This is this, that is that. I'll see y'all folks later. Deuces.